Arbitrum is an EVM-compatible blockchain, which means you can take the EVM, you can code in Solidity. What Stylus did is it introduced a second virtual machine, and it allows you to write in languages that compile to WASM. So you can write in Rust, C, C++. You can do all of that on a single blockchain.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hi, everyone. This is a Presto Research podcast. My name is Peter Chung, your host for today's episode, and I'm joined here by my partner, Ju-hyuk.
What's up, guys?
Yeah, and also joined by AJ Warner, who is the Chief Strategy Officer from Arbitrum.
Hey, nice to meet you guys, and thank you so much for having me. Really excited to chat.
Yeah, so thank you for joining us, AJ. And obviously, we're going to talk about what everybody's been curious about for the last week or so, ever since the Robinhood deal came out. Which is what Arbitrum is doing, and suddenly I think the name Arbitrum is attracting a lot of attention, not just from crypto, but also from traditional finance as well, I think. So we're going to spend the next 40 minutes or so discussing what Arbitrum is all about, and maybe get into a little bit about this Robinhood deal. Before we start that, I want to ask you, AJ, just as a way of introduction, who you are, how you got into this space, and how you find your crypto journey so far.
Yeah, thanks so much for having me. It's funny because that question, I get it less and less now as more and more people are coming into crypto, and I've been in the space for a while full time, but definitely have a non-conventional path into the space. So I first was introduced and excited by Bitcoin in about 2014. So my background is I did a JD MBA, so I'm a lawyer by trade at NYU. And when I was at NYU, there was like these very famous cases involving Silk Road and Charlie Shrem, who you may or may not have heard of or remember, but he was one of the first people that made it easy to buy and sell Bitcoin. And I was doing a seminar on some of the monetary compliance policies in the United States and how it might interact with the world of blockchain. And I found it fascinating. From there, so that was probably like my first journey. And from there, I very quickly sort of discovered Bitcoin and the incredible properties of it. And it was a time in my life where, I was a student, didn't have very much financial resources. And it was also a time when like a lot of the best companies in the world, especially in the United States, were going public later and later. Like the social media giants were like going public at like, larger than $100 billion valuations. And there was like no like economic opportunities for like non-accredited investors other than Bitcoin to like potentially see like 1,000x. So I got really excited by Bitcoin and I kind of fell down the rabbit hole. I remember at that point, it was in 2015, Steven, our co-founder and CEO at Offchain Labs, we were on a subway together talking about Bitcoin and crypto. And it was like right after Ethereum launched. I'm like, this Ethereum thing sounds like it's going to change the world. And then we just continued down that rabbit hole. And I guess, here we are 10 years later, scaling Ethereum, bringing it to the world. So yeah, I would say my journey started in quite a unique way. I was I've been working at Offchain Labs now for 5 years building Arbitrum. But before that, I was a real estate lawyer for 3 years and doing crypto in my own personal capacity. So yeah, a little bit of a different journey, but I love every minute of it.
Yeah. Okay. Wow. I didn't realize that Offchain Labs has such a long history. So Offchain Labs actually existed even before Arbitrum was launched.
So it's actually a really funny story. So the history and roots of Offchain Labs, the company was formed in 2018. But Ed, who's the chief scientist and one of the co-founders, he actually started building the first version of Arbitrum before Ethereum even existed. Mm-hmm. When the first smart contract papers came out, Ed realized very quickly that if we want this technology to scale and remain decentralized, you're going to need what we call layer twos today. We're going to need that sort of concept to exist. And if you look on YouTube at the earliest mentions of Arbitrum, you'll find his Princeton class seminar. what happens is, so they were building something called Arbitrum on top of a hypothetical layer one that didn't exist yet. Ed went to the White House. He was Obama's deputy CTO. And what happened was when he came back in 2018, after his tenure ended, Stephen and Harry went into his office and basically said, remember that thing you were working on? Well, we think Ethereum is going to need it because CryptoKitties is congesting the network. So that was sort of the genesis. They started building it out. And for years, it was, something that was being built. And then it launched in production in 2021 in the first version on mainnet. And I'm sure many people who've been in the space for a while probably remember that.
Yeah, that's really interesting backstory. So let's get into Arbitrum then. What I think many people in crypto space probably know Arbitrum well, but given that Robinhood deal is bringing so much attention from outside crypto, can you just provide a very high level introductory kind of introduction to the Arbitrum, what it is and what it does in the crypto space?
Yeah, 100%. The way to think about Arbitrum is it's a blockchain execution platform that is comprised of two core products, and we'll talk about sort of how it all works underneath the hood. Most people who are familiar with Arbitrum are familiar with it as a blockchain, what we call Arbitrum 1. And this is the blockchain that is used by like a lot of DeFi protocols, some of the earliest stage protocols like GMX, obviously Uniswap, Aave, all the major DeFi protocols are there. And, it's, in many ways in and of itself, a top 5 economic hub of all blockchains. Hyperliquid, for example, sources all of its USDC liquidity from there. Many other stablecoin issuers are using the platform. But that's only sort of half the story of what Arbitrum is. And we'll talk about the Robinhood deal, and the Robinhood deal really encapsulates the entirety of the platform. The other half of the way we think about Arbitrum is that it is also a platform that allows you to launch your own chain. And we have hundreds of chains that are using the platform to use it to launch their own blockchains. And when you want to launch your own blockchain, it is a very flexible, modular, feature-rich environment for you to be able to design the chain as you want. So you can think about chains like that have custom gas token, permission validation. They enforce royalties, at the smart contract level. The way we think about it is we want Arbitrum to be available to the developers throughout their developer journey. So if you want to launch on the public chain, and I think most, especially earlier stage projects or projects that need composability, shared liquidity, etc., they launch an Arbitrum 1. If you need your own chain, we can talk about different reasons why, you launch on the Arbitrum Orbit stack. Both of these are like two sides of a barbell of what we call the Arbitrum platform. Arbitrum as a platform is what we call a layer 2 on top of Ethereum. So these chains will settle to Ethereum. It inherits its security from Ethereum and allows the Arbitrum ecosystem to thrive in a very cost-effective and efficient manner, using Ethereum underneath it for security. So, just to talk about the Robinhood deal for a second, because it relates to this, Robinhood is launching originally, and we'll talk about the products in a second, on Arbitrum 1. So that means their products are going to be available to their users on top of the public Arbitrum chain. As they build out their strategy, they are going to be, bringing the company on chain, they're going to be launching something called the Robinhood chain, which is going to be utilizing the Arbitrum Orbit stack, which is the ability, and they're going to make customizations to that stack in order for them to be able to enable it. What's unique about Arbitrum here is that Arbitrum in many ways is the only blockchain platform that offers both of these options with a very robust product offering. So there's a lot of ecosystems that have like very strong public chains, like, Solana, Base, Ethereum, etc. Then there's a lot of ecosystems that offer a very strong stack, like the OP stack, for example, or others. But Arbitrum has both. And that allows us to support the entirety of the user and developer journey, regardless of sort of what kind of product they want.
Right. And actually, one thing that I kind of noticed as I was doing some research into Arbitrum is that Besides these two, you also have something called Arbitrum Stylus, right? Which
Yeah.
was introduced, I guess, second half last year. Can you also explain how they kind of fit into what you just described?
Yeah, so Stylus is almost like a product update for these products, and it's revolutionary. And Robinhood themselves, when they announced that they're using Arbitrum, flagged Stylus as one of the key features that they really liked. And what Stylus is for anybody who's used Arbitrum or developed on Arbitrum, Arbitrum is an EVM compatible blockchain, which means you can take the EVM, you can code in Solidity, you can have everything that you typically have on an EVM blockchain. But that's like what we call the floor, not the ceiling. We believe that if we want to bring all developers on chain, we can't expect everyone to learn Solidity or languages that compile to the EVM. But it's important critical infrastructure. So what Stylus did is it introduced a second virtual machine into the Arbitrum protocol. And it allows you to write in languages that compile to WASM. So you can write in Rust, C, C++, and you don't have to pick and choose. You can have an application that 70% of its code is written in Solidity, but for whatever reason, 30% is more cost effective to write in Rust. Or you want to pull in a different library written in C. You can do all of that on a single blockchain, whether Arbitrum 1, because that's where it's supported, or if you want to launch an Orbit chain with Stylus, all of this is enabled. So it's part of the same theme that we have, which is we want our technology stack to be as flexible as possible for the Arbitrum developer. So again, if they want to launch on a public chain, we have that. If they want to launch on their own chain, we have that. If they want to launch in Solidity, they want to launch in Rust, a combination of both. We want our platform to be able to meet developers wherever they are. And that's part of the Arbitrum promise.
Right, yeah. So let's get into Robinhood deal a little bit more in detail. I mean, you briefly touched on it, but I think all of these things that you described, I think will be better understood through the example of how Robinhood is utilizing your platform. So maybe stepping back a little bit, I think this Robinhood deal is like a dream deal for many crypto project leaders working on blockchain. And so they might be interested in kind of learning how all of this kind of got started and how it progressed until you announced the deal a couple of weeks ago. So can you just briefly describe that process?
Yeah. So I don't know if there's any like secret sauce or secret recipe here. We've been building a close relationship with their team probably for about 2 years now. They announced the collaboration with us around the Robinhood wallet, supporting the Arbitrum network. There was a number of initiatives, like growth initiatives that we did together. Our team built very good relationships. We worked very closely. They gained confidence in working alongside our team and that we can help them scale their journey. Because one thing that's very unique, and I'll talk about what Robinhood intends to do because it sort of, influences, I think, a lot of their thinking. They announced that they're bringing tokenized stocks to the EU and that tokenization is their strategy for global expansion, right? So they have a vision that they are going to continue to expand to new jurisdictions, support their new user bases through their tokenization engines. And this is in many ways an inverse of what we've seen from a lot of businesses that are entering into crypto. What I mean by that is what we see a lot of businesses is, it might be a traditional business and they're looking to add a crypto line. They might be a payments company and they want to add a stable coin. They might be, a trading platform. They want to offer crypto trading. But what this is actually is the inverse. It's Robinhood is using crypto rails to power their traditional business. Right? When people think about Robinhood, the first thing they think about is access to stocks, right? And that's what they're most known for. And what they're doing is they're using crypto rails to expand access to their products globally. And again, it's an incredibly powerful, this was the original vision of crypto and blockchain technology to me. We wanted blockchain to disrupt the traditional systems, disrupt the legacy software and replace underneath with blockchain rails. And that's what we're doing here. So this level of ambition is what makes this opportunity so exciting for me, right? It's not them expanding into a crypto product. It's rebuilding and reconstructing Robinhood on top of crypto rails. And for them to do that, there were a couple of things that were important to them. So first, they wanted to launch the tokenized equities product when it was ready, which is what they announced last week, and it went live on the day they announced it. In order for them to do that, their chain is not yet ready, obviously. They needed to launch on a public network. So for us, though, they knew they wanted, because again, this is so core to their business, and we can talk about why someone would want to do this strategy, like and mimic what Robinhood did. They knew they were going to want their own chain. So instead of like launching in one ecosystem and then migrating to a different ecosystem, Arbitrum, and again, it goes back to what I was saying before, really offered them this flexibility to do both. It offered them the flexibility to say, we're going to launch on a public chain, work with the same team to think through our migration strategy to our own chain later, right? So they get more familiarity with the technology, familiarity with the ecosystem, and familiarity with working with us, and they don't have to have, and they can have minimal disruption. So that flexibility was really important. Again, like you mentioned, Stylus, Peter, Stylus was really important to them too, because a lot of the people who develop with on top of Robinhood or want to co-locate with them are not necessarily going to be traditional crypto developers. So giving them access to Rust, C, C++ languages, instead of just sort of requiring everyone to develop in Solidity was a critical and important thing. But I think the most important component was the flexibility around their ability to launch their own chain. So if you look at the Arbitrum stack, even compared to other ecosystems that let you launch your own chains, Arbitrum is the most flexible and feature-rich. So things like you can decide every parameter, really. What's the throughput of the chain? What's the custom gas token of the chain? What is the block times of the chain? How do you want to determine whether it's permissioned or permissionless validation? How do you want to think about what the MEV strategy is? And for Robinhood, because they have such a forceful impact in this space, they want it to be the landlord and not the tenant. They want to be able to decide to make the rules for their own platform. And that's why they want to, ultimately, as they continue down this path, commit to launching their own chain. So I think that the product flexibility that we had, I think the belief in the competence of our team was important. And I think just relationship building. I don't think there was like some sort of silver bullet or secret sauce outside of just building, relationships and a good product that sort of did this deal. But if you think through and understand the roadmap, like the Arbitrum product offering is a very natural fit for what they were trying to accomplish.
Right. So, that's a very interesting approach that I guess Robinhood wanted to adopt and that you provided, which is, start with kind of more broad network of Arbitrum One and then kind of move on to their own chain. And I guess that thinking that, that the reason why Robinhood wanted to launch their own chain it has more to do with the customization of how chain operates that kind of maximizes their own needs. Is that the main motivation behind it?
It's customization, but it's also, if you launch on a public chain, and whether that's Arbitrum One or a different public chain, every time you pay transaction fees or your user pays transaction fees, it's an operating expense. If you're on your own chain, that operating expense converts into revenue, right? So if you are bringing the users and you're trying to make the best experience, you might want to abstract gas fees. If you're doing that on a public chain, that's an operating expense. If you're doing that on your own chain, it's one hand feeding the other hand, right? There's a lot of reasons, right? If you think about MEV strategies, if you're on a public chain, you're subject to the MEV leakage to that validator set or to that ecosystem. If you're on your own chain, you can internalize the MEV, right? So again, these are like not Robinhood specific reasons, but there's a lot of reasons why, especially if you have your own user base or if you want to do something that is really customized that is not available on public chains, why launching your own chain makes a lot of sense. We don't recommend everyone to launch their own chain, especially to start, because there are trade-offs. Obviously, you have to make sure you have the user base. You have to make sure that you can attract the liquidity. But that's where Arbitrum One, really comes in. And it's really a trade-off of whether the benefit of co-location outweighs the ability to turn operating expenses into revenue.
So, also the other thing I was wondering when I heard this news for the first time was that there's going to be other companies who want to follow Robinhood's footsteps. So my guess is that maybe you guys are already talking to many other Web2 or traditional finance firms for something similar. I mean, I know you cannot probably go into too much details, but to the extent that you can talk about, can you kind of describe the type of conversations you're having right now with other future future potential partners like Robinhood?
Yeah, definitely. So, obviously I can't share anything that's not already public for obvious reasons, but like even, in terms of chains that have announced that they're using Arbitrum, Converge, which is a chain that's being built together by Securitize and Athena. They are also using the Arbitrum Orbit stack, as well as the Ethereal Perpdex, which is being built on top of that using USDE. So that's another major sort of ecosystem and asset manager and issuers that we're working closely with. We are seeing an incredible inbound, right? Just for context, like there's more than 100 Orbit chains that are already, sort of either announced or live in production. We're seeing, I would say, historically, a lot of them were crypto native companies. But now what we're starting to see, Robinhood obviously being the largest announced one, is a lot of, traditional financial institutions, asset managers, banks, major enterprises that are looking to come on chain. Are excited by the Arbitrum Orbit stack. They like the flexibility of it. They like the customizations that it can offer to meet either compliance or business needs. We're working with major institutions that are already launching also on Arbitrum One, right? So, it's obviously it's public, like asset managers like BlackRock, Franklin Templeton, Standard Chartered, UBS, Invesco have assets or pilots that they're running on top of Arbitrum One, the public chain. So I would say the last 6 months have seen incredible acceleration of, the convergence of TradFi and DeFi. That's always been the Arbitrum thesis, that crypto rails and DeFi rails will just power traditional finance. And we're starting to see it come together. I would say after the Robinhood announcement, that was probably on an Arbitrum level, maybe even accelerated. A lot of people are sort of really excited to, they're getting more aware of the power of the Arbitrum platform, and they're reaching out to see how we can work and support their use cases.
Right. And your conversations, are there any geographical like a skew to it? Is it mostly taking place with the US based firms or more global or any other?
It's interesting. I mean, we have a very global mandate. We work very closely with firms across the world, team members in Korea, Hong Kong, Singapore. Obviously, we're largely in the United States, but we're seeing pretty global demand and excitement. I would say predominantly still the United States, just probably because of the relationships that we have. But I think you'll be surprised by sort of how many impactful partnerships and collaborations are announced coming out of APAC as well.
Great. I just wanted to, kind of curious about how this tokenization trend would, let's say, liberalize or like democratize the capital markets, as they say. Like, seems like a lot of companies are, and these TradFi institutions are using tokenization to, I guess, evade SEC regulations, that type of stuff. I read too much of Bloomberg articles from Matt Levine about, how these tokenization trends are actually reversing the trends that were created after 1930s, like, all that stuff. Like, I just wanted to hear your opinion on this trend. Will it accelerate due to tokenization, or do you think like this will also be like a totally regulated sector in the future?
Yeah, so I think I haven't read the Matt Levine piece. I'm not going to comment on that, but I think that a lot of the asset issuers are looking to do these tokenization products in a compliant way. I think that there is a huge demand for regulatory clarity, both in the United States and Europe, whether it's through MiCA, as well as in Hong Kong, and in Singapore, Dubai, other major sort of financial hubs and jurisdictions. I think that we're starting to see the beginning of some of this regulatory clarity, and I think that ultimately tokenization is just a much more cost-effective structure for offering assets, compared to the traditional legacy systems, right? So I don't view the value proposition of tokenization as regulatory arbitrage. I view the value proposition of tokenization as a much more efficient and cost-effective mechanism to have these assets distributed in jurisdictions where it may not have made business sense under traditional rules, to sort of set up all these different structures to try and make these assets available. The reality of blockchain is it's just, it's about enabling access to assets that are sort of living in a shared state. I would probably disagree with the framing that like this is intended to be sort of like a regulatory arbitrage. I think it's much more about figuring out ways to have regulatory frameworks that sort of are representative of what we can do on a technological level today, compared to, you referenced the 1930s, which is obviously sort of before the existence even of computers by like half a century.
Yeah, it seems like, a lot of guys at, these big media publications and people who are inherently kind of biased against crypto want to frame it in that way. So yeah, it was good to hear your opinion.
Yeah, maybe just to shift the gear a little bit, can we maybe step back and talk about the layer 2 landscape broadly?
Yep.
Because there has been a lot of competition in that space. And I think, somebody like a Base has been also getting quite a bit of traction. How do you think you are competitively positioned against your peers? And is it even fair to like compare different L2s? Because it seems like a growth strategy is not necessarily the same. So what's your view on that?
It's a great question. Peter, I would say like 18 months ago, I would say that the layer 2 landscape was in many ways much more competitive, in that everybody was trying to do the same thing and just do it better than their competitors. I think that the strategies have evolved significantly amongst Arbitrum and its competitors. So not to dwell too much sort of, but I'll give you like the landscape. I would say in terms of like existing layer 2 blockchains today, not stacks, but just pure blockchains, like the core liquidity and economic hubs are Arbitrum 1 and Base. Arbitrum 1, today as of recording, has like the most ETH, most stables, whether it's both USDC, USDT, of any blockchain. And I would say is probably doing a lot of like economic activity on the DeFi side. Base, obviously incubated by Coinbase, has a huge funnel of distribution that they see from there, is probably, and is doing a lot more on the consumer side, I would say. But those are like sort of like the two really core economic hubs of layer 2s. But even then, they have very different strategies, right? So Coinbase leans very heavily into Coinbase infrastructure, and Arbitrum 1 is very credibly neutral, right? It's an environment where, stablecoin asset issuers, DeFi protocols kind of feel like it's a much more neutral playing ground, right? We have, both, huge amounts of USDC and USDT. We have different perps protocols. We have different lending protocols, DEXs. So it's a very different environment. And Base is also not really prioritizing like a platform that has a stack and a chain, right? That's probably more like the OP stack, right? The OP stack, where maybe 2 years ago, like OP mainnet was a priority. I think they've probably deprioritized that and reprioritized sort of what they call like the super chain, which again is much more about like uniformity of the blockchains. It's about like a uniform experience and interoperability. And Arbitrum is just focusing on just like how can we have the best execution environments available, so that, if you want to launch on a public chain, we can give you the best public chain. If you want to launch on your own chain, we can give you the most flexible environment, the best features for you to be able to do that. So I would say that like it's obviously still early, right? Like Robinhood's going to be launching their own layer 2 chain in partnership with Arbitrum. I'm sure they're going to have tons of economic activity there, similar like with Athena as well. That's going to be building with Securitize and us. So like, again, I think it's very early. I think that the way we position Arbitrum is, and we can talk about sort of the economic model of how Arbitrum works in a minute if you'd like. We just want, we like to have a tagline of like Arbitrum everywhere. And our perspective is we want to see everybody using Arbitrum in some form and capacity. and Arbitrum being core to their blockchain strategy. And I think it's a very different vision than what you might see at Base or Optimism or others.
Yeah, actually, let's get into that economic model that you just mentioned. So, how is your economic model and also what role does kind of your token ARB token plays? What kind of role does it play in that model?
Yeah, so I think there's some interesting things, and I'll go on a little bit of a tangent and I'll bring it back because you'll understand why I'm doing this. One of the unique things about Arbitrum is its governance structure and its economic model. And it's unique amongst L2s for this. And it's also, the L2 model is very different than the L1 model. And it's important to kind of understand this because when you have the L1 model, right, let's just take, Solana, Ethereum, Avalanche, Sui, Aptos, and any of these sort of layer one blockchains, they all have, outside of Bitcoin, like something called proof of stake. They have a validator set. And what happens is all the transaction fees and the MEV, it gets routed from transactors or users and distributed to validators. And the protocol does not actually internalize any of this, right? It's like, it's like constantly streaming dividends, essentially, if it was like, an equities comparable. Arbitrum is different and layer twos are all different generally on this sense. And what's different about Arbitrum and layer twos is, let's just say for example purposes, obviously it's not this expensive, but let's say each transaction Arbitrum cost $1. Under the hood, what's happening, because it's a layer 2 blockchain, about 7 cents is paid to Ethereum for economic security. And the rest of it, the other 93 cents, is actually internalized by the blockchain. So you don't need to distribute anything to stakers or validators for security. You can internalize this mechanism, right? And that's actually really important because you can compound your earnings and you can use your earnings to grow the protocol, to grow the demand for the platform. And this is something we've been really prioritizing at Arbitrum, and I'll walk you through the business model in a second. But it's actually quite unique even amongst layer twos, because where most layer twos, I think the token transaction fees accrue to the foundation wallets. On Arbitrum, all transaction fees accrue on-chain into a treasury wallet controlled by token holders. So, yesterday was actually a huge milestone in the Arbitrum ecosystem. The Arbitrum DAO passed more than $100 million of non-ARB assets that are owned by the DAO, which means that are controlled by token holders can only be removed or disseminated by token holder vote on chain. So when we think about that, what are the three core sources of revenue? So it's transaction fees on Arbitrum 1. Then it's a thing called Time Boost, which is the MEV strategy on Arbitrum 1 that was deployed about 2 months ago. It's a whole other conversation. I'm happy to get into it if you'd like, but that's generated in the first 2.5 months, a little more than $2 million. It's annualizing right now $15 million a year in profit for the Arbitrum DAO. And the third, which is very related to these conversations that we're having about Robinhood, is what we call the Arbitrum Expansion Program. The way it works is if you want to launch your own Arbitrum chain, there's 2 options. If you launch as a layer 3, it's free and permissionless. You don't have to pay the Arbitrum DAO anything to do that. And the rationale for that is because there's a lot of network effects and you're paying the Arbitrum DAO by settling to Arbitrum 1. But if you want to launch as a layer 2, or if you want to launch as a layer 3 on top of a different blockchain, there's a 10% profit share with the Arbitrum DAO. So that's the third revenue stream. And, all of these different blockchains are going to be paying this as they launch their own layer 2s. So those are the 3 sort of core revenue streams that are derived from the technology. But now the reality is that we have all these funds, and the question is, what should you do with them? And what Arbitrum has been uniquely doing, and we've got this idea of a digital sovereign nation, where we can take the natural resources and convert that into opportunity to do 2 things. Grow demand for using Arbitrum as a platform, and also compound the value that's generated by the token holders. So Arbitrum has what we call the Arbitrum Gaming Ventures, which is a fund that essentially the Arbitrum DAO is almost like the LP of this fund, and they're investing in gaming and consumer applications at the application layer. We've got a team that's building out DeFi strategies for deploying the Arbitrum DAO's treasury into DeFi, again, with the same thesis of we want to bring on more builders and compound the growth of the treasury and demand for the network. There's a third team that's building out a strategy of treasury management around, buying money market funds, diversifying into stable assets, etc. So we were doing all of these things in ways that are, compounding this dual mandate of growing the demand for the treasury and growing demand for Arbitrum block space. So that's like the core vision of Arbitrum, and the Arbitrum governance is at the heart of this. Arbitrum governance controls two major things. It controls the purse, which is the Arbitrum DAO Treasury Reserve and all assets that's generated from transaction fees. And it also controls protocol upgrades for Arbitrum 1. You cannot upgrade Arbitrum without a DAO token holder vote on chain.
Right. So so you mentioned the 10% the transaction fee revenue. So like deals like a Robinhood, in the case of like a Robinhood, they would also be part of that process, right?
Yes.
Okay. So right. So the 10% of the Robinhood's kind of a commission being generated from it, is that what the part that you share with the?
No, so it's not at the application layer, it's at the blockchain layer. So transaction fees, ordering policies, priority fees, etc. So that's what the 10% share is, right?
Got it.
You're not at the application layer.
Yeah, got it. Understood. So AJ, so maybe I think we're almost coming towards the end of the conversation, but just one last thing I want to ask is, I know we covered a lot of stuff, but there may be a few things that you might want to kind of still talk about that was not touched during our conversation. What would that be?
That's actually, we covered a lot. I think I got a lot of my main points. I think that the main thing I would say is there's a lot of blockchain solutions that exist. I think what makes Arbitrum unique, and I mentioned it a few times, is the flexibility of the product. And I think people sort of, in crypto, there's always like the shiny new thing. We, I think have a reputation for sort of being that, stalwart of the industry to focus on building strong technical products. And I think it's really cool to see sort of the validation of our thesis of building products that are going to solve real world problems come to light. So I guess, to sort of turn the question, if you're trying to build something on chain and you feel like whatever solutions are not working, like please reach out to me, our team. Like we pride ourselves on trying to make the blockchain as flexible as possible for use cases. So it's like, it's still the beginning of this journey, but that's sort of like maybe my plug is, feel free to reach out. And, I hope like Arbitrum can be there to sort of service whatever you need.
That's great. I'm very mindful of your time because I know it's late in where you are. So maybe we should end our conversation here. And I want to thank you again, AJ, for joining us for the great conversation on Arbitrum.
Yeah, thank you so much for having me. This was a lot of fun. Really appreciate it.